Good afternoon. It is October 7th. We are looking at a chart of the S&P 500. We are going to take a look at the QQQ, the IWM, and the XLF. Okay, let's get straight into it here, see what we can find on the charts. What you're looking at right now is the daily chart of the S&P 500, and what I've done is I went ahead and put in there's a trend right through here, and you can see it's coming off of the April lows, going across here, and then it cuts through where we can see the market fell through this area. It was support, it fell through, it's acting as resistance. It's creating this kind of a wedge pattern, and I don't think we should really call it like a wedge as far as bearish because, I mean, though it could be bearish, one thing to consider is we do see price coming across the screen right here. We see price having a hard time getting through this resistance area. And so yesterday we were kind of calling that a bull trap because the market rallied. It looked like it was going to break through that area and then it sold off pretty hard. For whoever took that trade yesterday, we had a pretty nice reversal today. Overnight in the future session, I don't know, maybe there's a tweet sent out yesterday that the market pulled back or got rejected from that price area. And then of course, maybe another tweet coming out talking about more stimulus hopes. So the market is kind of, let's just say it's a little bit news, reacts off of news pretty heavily. So we got to be very cautious of that. One thing I'll say though for the bulls is we do want to see price get over this area 342.17, and for me, you know, putting it all together today at the market open, I decided not to enter long. In fact, I decided to stay mostly neutral. There was a couple trades I made, a couple trades I added or adjusted from yesterday. So that's one thing to keep in mind is the market, it was sold off. It went down in the overnight session a little bit, and then it's pretty much gone straight up since then. So maybe we'll see a pullback. If I was to get long on this market, what I would be looking for at this point is either a breakout, a back test, and that back test can come on like maybe a 15-minute time frame, 30-minute time frame, but either a breakout and a back test, or if we trade sideways, I would be definitely looking at being a buyer in that scenario. You know, as far as taking another short trade, I'm not sure. I think it's okay to be short just as long as you know that you are going to be stopped out if you start getting above this 342.17 area. And I can give you an actual price. It's the high of, well, my cursor here, it's the high of this candle right here, which is 342.17. So if price starts getting above that area, that would be a pretty good idea to I don't know, take a stop loss. If, you know, for me anyway, being in a short trade, that's what I would do. Let's go down to an hourly time frame just so you can kind of see what I was referring to here. As far as there is a lot of buying and coming up in this area, we saw it sell off, and again, whoever decided to go long yesterday, you had quite the trade set up, and you saw the market gap up this morning. Let me zoom in just a little bit more just so you can kind of see the hourly candles. You saw, you know, some support down here. In fact, we fell through this rising trend line. You know, I don't know, price fell through, rally back above. If you did take that trade and you are long, what we did notice is what we talked about in stream today was this is a bull flag. You have the flag pull out going up here. You have the market open. It rallied a little bit. It created a flag in here. And so since then it's broken out of the flag pattern. It pulled back a little bit and now it's kind of in limbo. Maybe it's waiting for some sort of news to come out. You know, so we'll see what happens as far as tomorrow is concerned. Anything is possible. I am leaning a little bit more bullish because the bears really needed this to sell off, and because it didn't, because it was a very bearish day, because it didn't continue selling off, there was no continuation. That to me, it's a false breakdown. In fact, you could call it a bear trap where buyers all of a sudden showed up and pushed price back up to where, you know, back to where they were yesterday. It should have broken down. It didn't. And so for that reason, I would be leaning more to the bullish side, looking for a possible breakout. Let's go to the Qs. Okay, so the Qs were a little bit more bullish. In fact, you saw the Qs leading the way a little bit today. Maybe there's a little bit of rotation out of the IWM, the small caps, the S&P 500. Maybe there's a little bit more rotation into the tech space. And so Qs, again, we were talking about this on yesterday's video. We talked about how this could be a type of flag where you had the flagpole here, and then you have this bull flag pattern. Now, you could do a proxy trade, which you could go into one of the FANG stocks or something that looks a little bit stronger, or possibly something that's a little bit more oversold. Like, I don't know, I'm throwing something out here though. Maybe Disney or maybe Apple. Find something that looks like it could have a lot more potential to the upside. One thing is for sure though, out of this bull flag pattern, if it did break through here, there's two areas that I would be looking at. One is here and one is here, and I'll give you actual prices on that. The price of this first one is 288.93, so we could just say it's around 289, 288 to 289 price target. And then if it can get above that, you're definitely looking at the high up here of 298. I know that's pretty far away to even think about, but just to give you those ideas. Now, if for any reason we are selling off here, there's definitely some strong support under here. Keep in mind what we've talked about before is the more times that price plays and flirts with this support area, and this is actually a gap down here, the more that price plays with that area, the more likely it is price falls through that area to the downside. So keep that in mind. We do want to see this. It is having a hard time getting through resistance, and sometimes what happens is when we see a chart having a hard time getting through resistance, sometimes we'll wake up, we might wake up tomorrow with a gap higher. It likes to gap over that price. So we'll see if, as far as tomorrow goes. Let's look at IWM. And the funny thing is I'm giving you kind of really a bullish case on a lot of these. And one thing I want you to keep in mind, and we did a post about this today, is this technically still is a reversal candle from yesterday. So traders definitely can be short against the high of this candle. This is an extremely bullish uptrend. So be very cautious if you are trying to short this. There is a zone between 160 and 161.45. Be very cautious in that short trade. Maybe lower risk a little bit so you're not so heavy in that short position. But it is okay to be short against this, but keep in mind we keep pushing up into that area. So it's more probable at a certain point, maybe a couple more days of consolidation, or maybe we'll just wake up tomorrow and there'll be a gap higher. It was a very bullish day today, especially where we came from. So keep that in mind. I'm going to go to an hourly time frame. And by the way, guys, feel free to subscribe if you're new. By the way, welcome if you are new. And subscribe, bell notification. That way when we go live on Sunday, you guys could join us. You won't miss a thing. We go over charts and stocks. Also check us out, rtbtrading.com. The link is in the description. Okay, let me get off of the commercial. So, now we're looking at an hourly time frame. You see this perpetual buying here. We did have a breakout a few days ago around here. We did have a short trade entered yesterday based on this price zone. You can't see it on the screen, but there's price zone back here like we were talking about before, a previous gap. And so it had the rejection, and now it's rallied back up into that price area, and then it just rests. Now it's resting on 160. So again, you could be short against these highs. Just be careful, because the more times we run up into the highs, the more likely it is, of course, that we break out. Let's go to the XLF. This one's a little bit tricky. Maybe a little bit more consolidation. Again, it's very bullish, especially from back here from 924. Keep in mind, we do have banks reporting earnings. I believe it starts next week, maybe on Monday, Tuesday, Wednesday, somewhere in there. A lot of banks are reporting. We'll see the banks come out first with their earnings reports, and then towards the end of the month, we'll start seeing things like Apple, other stocks that we like to watch. So keep a lookout for these earnings plays. There was a few that we took as far as the possible earnings run-ups, and so just kind of keep that in mind. I'm going to go to an hourly time frame, and same thing. Even if you are bearish the XLF, which longer term speaking, I am more bearish than I am bullish, but I have to also keep this in mind that this price action here in this last week has been pretty bullish. So to be honest with you, price should have sold off after this reversal yesterday. And again, if you're trading this, you can be short against this high if you're around $25. You can absolutely be short against that. Maybe this was a down move, and then this was a retracement, and then we'll have a further down move. Or maybe it's just one of these things where it found support, it rallied, making a bull flag, and it's going to break out. In fact, I don't mean to double back on you guys, but let's just go look at SPY one more time and kind of show you the same scenario in SPY. Let's go like this. We'll keep this video short for you guys. Just wanted to show you what we were looking at. Same scenario goes with SPY. You see this is resistance right here. We had a rejection at that price level. It's possible, as far as if you are a bull and you're expecting higher prices, keep this one in mind. It's possible that this could be a pullback for another move down. That is absolutely possible. We have to keep in mind both scenarios, and that's also why I didn't want to go. I would rather go neutral than going long or short at this point. I want to see more sideways consolidation, or I would like to see a breakout first and then a back test, something like that. And then if I do want to enter a short trade again, you could be short against this price, but knowing full well, if you are putting risk on to the downside, knowing full well that if you get above this price level 342.17, you should be, in theory, stopped out of the trade. That wraps it up. Again, join us Sunday, 5 p.m. Pacific Standard Time, where we go over charts and the stocks that you guys like to look at. And we will see you in the next video.